What is going on, everybody? This is Forex BB once again. Welcome to our channel. Today we are going to discuss about one among of important tool in Forex trading, especially in technical analysis. Goes by the name Fibonacci or Fibonacci retracement. I have been getting some DMs, some people be asking like, when are you going to release a video explaining about how to use Fibonacci? Please release any video so as we can learn how to use Fibonacci in our trading. After you drop your comment, make sure you subscribe to our channel and you turn on that notification icon, so as when I'm about to release a video concerning or relating to your comment, you'll be able to be notified. So make sure you subscribe and you turn on notification. Before everything, guys, let me explain the meaning of Fibonacci retracement. Fibonacci retracement is a technical analysis tool used in trading to identify potential levels of support and resistance on a price chart. A Fibonacci retracement has key levels. These key levels, each key level has its own meaning and it is main function. Now, the following are the Fibonacci sequence numbers or levels. The first one is 0.382, that is equal to 38.2%. The second is 0.500, that is equal to 50%. The third one is 0.618, that is equal to 61.8%. And the last one is 0.786, that is equal to 78.6%. To apply this tool, a trader must identify a significant price move on a chart and then draw lines at the above ratios from the start to the end of the move. Not only but also these lines act as potential levels where the price may reverse, continue or consolidate. Now here is how they are typically used. Starting with the first ratio, which is 38.2%, often considered as the first level of retracement. Traders look for potential reversals or bounce from this level. The second level is 50% level. This is not a traditional Fibonacci number, but it is included due to the significance in human psychology, since it is common for the price to retrace half of the move before continuing with the move. Another one is 61.8%. This is considered to be one among of important Fibonacci ratios. Many traders believe if the price retraces to this ratio or to this level, it is more likely to continue with the original trend. Most of my trades are executed once the price retraces to this level. The last one is 78.6%. Although this is not a true Fibonacci ratio, but it is used by some traders as extension of Fibonacci levels, and it is said to be a very strong reversal point. But personally, I never use this as my reversal point. Hello guys, this is Euro USD on daily time frame. Now I want to analyze this pair or to identify the end of the coming retracement after the moves. As you can see, the market just dropped it from this point to this point, then it made a retracement from this point up to this point, then it made an impasse. An impasse was formed, then it made another retracement before proceeding with the real trend or real move. So this is this is impasse. If you don't know what impasse mean, you can go back to my videos that I posted last week, I think. Last week you can see how or what is impasse. So here guys, this is our impasse. We want to identify the end of the coming retracement. This is the end of this move. as you can see, the move started from here up to this point, I mean down toward this point. So I want to identify the end or the point where this retracement, the coming retracement, will be retracing. So I will take my Fibonacci and I will place, the first point when the market trend is a downtrend. So you start to point with the top, I mean the starting point, or to place your Fibonacci, you have to start with this upper point, or the upper point. Then okay, let me do it. So you place there, and then your last point or your end point will be here. So as you can see here, guys, I have applied my Fibonacci. So before even doing this practical, I said like I prefer to use this point 0.618 as my potential area where I expect most of the retracement retraces. So to mark this point so as to wait for any opportunity, I'll use this rectangle. So an area that is covered with this rectangle marks the point where market may reverse. Let me show you guys by using this arrow. So my thought is like this retracement will start from here and just hit this level before continuing with the real trend. So let us allow the market to unfold so as you can see what is happening, guys. As you can see here, guys, the market just touched the rectangle with these two candlesticks. So this will be my entry, though my entry will be depending on the confirmations that I'll find them on lower time frame, like 4 hour time frame. This is daily time frame, so I will check on hour time frames so as to place my order or to see some confirmations that will allow this and will confirm this as a sell setup. So this level seems to be very potential. As you can see, the market just bounce below it and then proceed with the move, as you can see, guys. So the market dropped up to this point. So that's how you can place your Fibonacci. Okay, let's say we want to anticipate or we want to forecast about the coming retracement. Where will it retraces, as we have seen for this retracement, and then let us see how this coming retracement, where the point this retracement will retrace. So I will take my rectangle again and place here. This is a point, or this is a level where my potential ratio starts, which is 0.618 here, guys. So again, I expect like this market to move, or this retracement to move upward. There's this point. So before proceeding with the real trend, so I hope like this market will come and retrace here before even going down. So let us see how the market unfolds. Though this point we pressed our Fibonacci was not the lowest the market came and formed the lower, though also not bad, because as you can see guys, still our point was still valid. As you can see, the market managed to retrace up to this point, then started to flow with the daily trend. So let me play up this point. Yeah, so this move started from this point up to this point. So you can see how this point is very potential, and the market respect a lot, and a lot of the retracements touches this point. So I prefer to use this as my potential reversal ratio. I mean reversal ratio. As you can see, most of the retracement retraces after reaching this point. Yeah, that's how this is on downtrend. Let us see on uptrend, guys. Here comes, guys. How about when the market is on bullish trend? I mean, when the market has an upward trend. Let us see how we can use this Fibonacci to identify the end of the retracement. So you guys, if the market trend is upward or uptrend, you have to start with the bottom. So your first touch or your first point to place your Fibonacci for the first time, you have to hit the below point or the down point toward the upper one here. So you see, guys, this is how you can place your Fibonacci before using it. So as I pressed my Fibonacci, I will find where there is 0.618. I mean, this is my very potential point where I believe like the market will always, not always, but I can say mostly, most of time it will retraces. So I'll put my rectangle here. So like this one. Some people may ask like, okay, if you consider here this rectangle was our stop loss, it will be very huge or very big stop loss. No, this is not my stop loss. To recognize my stop loss, it is until I go to down time frames. I mean smaller time frame like hour time frame, with other confirmation, with combination of other confirmation, I will identify where I will put my small lot size, I mean stop loss, like 60 pips as my stop loss. So you can't use Fibonacci at the only confirmation for your entry, or at the only confirmation for your trade. So you have to include the other confirmations so as to identify as an entry or potential point. So here we identify only the potential areas where the market may reverse. That's why I put this rectangle. So this area is where market may reverse. If you have a lot of capital, I mean big capital, you can just put your stop loss here, but that will be very, very uncareful way of trading. You have to include other confirmations. So here, guys, is my potential area where I expect the market to retrace before proceeding with the uptrend. So let us see how the market unfolds. Yeah, as you have seen, guys, the market touched this area with only wicks. That means there is high pushing power, or high bullish power. Yeah, I can say that. So you can see how many times this point has been respected by these retracements. So let us proceed. Yeah, as you can see, guys, the market just touched that point and moved very far. As you can see, there are a lot of pips here from this point to this point. So this is how you can catch a big move by using this Fibonacci. Okay, let us proceed, guys, and see what market do. Okay, so as you can see here, guys, now the market is starting to make or to form another retracement. So I will take my Fibonacci. As I said before, you have to consider first this lower point, then the upper one. Though this is just like a news, so I will consider this one point, or you may, whatever, but this is very important. I mean, this is very important point than this, because this might be some manipulation, not really move. You know, market sometimes makes some spikes that are not really what really moves. So as usual, guys, I take my rectangle here to cover this point. So here is my potential area where the market might retrace, so as I can take any advantage. Not here, because this is a daily time frame, so I will wait until the market. I will analyze the market in hourly time frame, so as to minimize my stop loss. Okay, so let us pray so as we can see how the market unfolded. Here, guys. Yeah, so the market keep on coming in that area, but at the end of time, the market start to move upward. So as you have seen, guys, the market approached this area 2 times, first time and this second time. So you can see how this area is strong, how strong it is. The market approached it 2 times without even breaking it. So that's how this Fibonacci will help you guys to catch a big move in the market. Okay. This is enough for today, guys. So thanks for your time, guys, and may God bless you. Be blessed.